Hi, I'm Victor. I'm an active value investor and I enjoy recording videos on the companies that I invest in, sharing with you my analysis, my point of view on companies, and hopefully that's helping the individual investor community on YouTube. Today's company is Digital Realty Trust. This is a REIT, which is a real estate investment trust. There's special rules that I'll get to later about these REITs, but just a quick summary of what DLR does. This company provides data centers to some of the best known companies like Meta, like IBM. And these companies will lease out space in a data center to put their computers in order for them to put out things like Facebook. And then users can come to their websites and not knowing they're using a computer or a system that's in a DLR data center. They lease out that space. I think it's a very good model, and they serve a community of companies that have a very bright, high growth future. Let me share with you more about DLR. I like to scorecard my investments, and it involves 4 key criteria for a REIT. And that follows with a decision whether I should buy more shares of Digital Realty Trust, hold or sell my shares. The first question, do I want to be in the industry? Is the company operating and performing well? Is the dividend they pay sustainable? And I want a discount on the stock. That way I could see my stock price go up over time. Based on the answers to those questions, would I buy more shares today, just hold or sell my shares? So DLR has a global footprint of data centers all around the world. And you can see that they're in major populated areas, a lot of them in the United States, Latin America, Europe, Asia, as well as Africa. So they're serving the whole world as companies like Meta that have Facebook and other applications around the world. This company will lease out space to companies like Meta for them to operate their websites and their applications. Looking at the companies that they do business with, here's a Fortune 500 software company. I'm sure they can't name the company, but you can tell if they're on the Fortune 50, that's a big software company. They also have companies like IBM, Equinix, which is a big data center company themselves, LinkedIn, Meta. These are really good companies. So it's good to see that this company is leasing out space to very profitable, good companies. So I value companies that are REITs using their dividend and then applying a formula to arrive at a fair price for the company. I'm going to use the value per share formula would be the expected dividend divided by the discount rate minus the perpetual growth. So this is the formula that I use for valuing these types of companies. First, the dividend rate is $4.88 per year. The discount rate I'm going to go with is 9%. That's a little bit high, but this is a company that's exposing real estate around the world. So I thought it'd be good to be conservative. Over the last 5 years, they've grown at 11%, which is great growth. So I'm expecting them to grow 5% per year, and that's natural. I happen to be in the technology industry and know that these systems continue to grow because storage, we're storing so much data. As an example, these computers have to have more and more storage. Their compute, now we're talking about artificial intelligence, AI. So all those things tend to grow. So a 5% growth rate is fairly reasonable and I think conservative. Based on those factors, I come up with a value per share of $122. The current stock price is $109. So it provides a 12% discount on the shares currently. So a nice high dividend rate, and you get a nice little discount. Performance of this company has been excellent. Over the last 11 years, they've grown 11%. And last year they grew 6%, which is really good. It's been a profitable company and they pay a nice dividend of 4.32%. For 2023, I expect that they're going to be a consistent grower, profitable, and have good free cash flow. They have an excellent list of customers and demand will continue to be high for their properties. And they'll continue to pay that 4.5% or so dividend. My outlook long term, this REIT really serves fast growing industries. So I really like being a shareholder in a company that is part of the future. And I think their business will continue to grow really well. The dividend will remain high. I think they have some pricing power because where will these companies go? It's very difficult to find good data centers. And this is a more exciting REIT. REITs tend to be a little bit boring. They're just real estate. I own real estate as an investor, and you kind of just watch grass grow with those companies. But this one does get involved with data centers, which is quite interesting. So revisiting my scorecard, is this an industry I want to be a part of? Absolutely. Renting out data center space to these really exciting companies is interesting to me, and I think could be very profitable for this company. This company is operated very well, respected by some of the best companies in the world, and that says a lot. That their client list says a lot. Their dividend is sustainable, and there is a discount available on the stock. Therefore, I'm going to continue to buy shares in DLR. Thanks so much for watching the video. I hope you found it interesting and discovered something new about DLR. Do me a big favor and like my video. Consider subscribing to my channel if you like content like this. Keep in mind, I'm not making any specific recommendations to buy any stock I cover. I'm just sharing my experience as an individual investor. In this case, I'm an investor in DLR. Good luck investing in 2023.